Well, hello and welcome and hello. It's Danny Deals back once again for another exciting episode of Un Poco Mas, the show where we give you just a little bit more. Guys, today is Wednesday, August the 2nd. It is 12:23 p.m. out here in beautiful sunny Los Angeles. We've got about half an hour left in our trading day. Guys, it has been a wild ride and a long, strange trip. The SoFi stock on a pretty solid earnings report, excellent growth, really no closer to profit in terms of EPS than we have been the last few quarters. I think that's why the stock was not able to sustain a massive rally because, I've been telling you all along, guys, until the stock makes a net profit, until SoFi makes a net profit, it is going to be subject to the whims of market makers and their minions and the analyst and the media community. And the stock is simply not going to go up and moon and rocket ship. It's just not that kind of stock, guys. You're not going to see these dramatic numbers where one quarter, the revenue just triples or something. It's just not what it is. It's a long term, solid, free cash flow machine. But you have to realize it's still early, guys. We are still pre profit. Everyone wants the stock to moon because, we grew membership more than expected. I mean, grew deposits a little bit more than expected. I mean, the deposit growth is solid, guys. The direct deposit growth is solid, but I just am saying it till I'm blue in the face, guys. The company has not made nickel one yet. There's way too much stock based compensation. There's just some things that are not like where institutions are going to rush into the stock. And this earnings report is not going to cause any institutions to rush into the stock. Yes, it's good for the growth story, and the growth story is extremely important to me as a long term investor, as it should be to you. But institutions are looking for returns, institutions are looking for profits. Dividends. They're not looking for a story. Like retail investors like you and me, we're willing to buy a story if we believe very, very strongly in management. So, guys, I'm the Shart Master. I got a new pair of shorts after the earnings report, after that massive sort of pump and dump. Remember, I said they were going to run a dump and pump, which is basically what they did. Like they dumped it pre-earnings, they didn't run it up at all, and then they pushed it up really quickly, got everybody buying in on FOMO, and then cashed out of those short-term call options that went absolutely insane in value on Monday, dumped that shit right on retail on Tuesday, and there it sits. And you can expect them to pretty much hold the stock something around this level. And you guys can see those options here. There's still 26,000 calls open at $10 and 14,000 at 10.50 and 22,000 at 11, 7,000 at 11.50, almost 10,000 at 12, guys, 3,000 options at $13. Like those are all going to expire worthless. So again, it's the same old story, but this time they just kind of reversed the order on things and they ran a very quick, very dramatic pump on Monday, drew in a hell of a lot of retail money. And market makers, they played this one different because everybody knew what to expect. And of course, the Wedbush reiteration of their $3 target came a little bit later, but it's still there, guys. The fun never stops. But just back to the charts, want to just show you this a couple of ways, guys, why I'm still very bullish, what these levels are, why they're important. Guys, 975 is a critical level of support that we need to maintain. You can see it was resistance here on after that massive first leg of the rally where the stock ran from like in the fives all the way up to 10, 23, and then checked back, stopped here at $9.75. So that was a critical point of resistance. Again, it was a critical point of resistance on July 19. Guys, that's after we found support twice down here at the eighth or whatever that was, around $8. Critical point of resistance again here on July 19. Critical point of resistance again here on July 27. We see the huge pump and dump, guys, on July 31st, then August 1st. August 2nd, the carnage continues. This is an extremely bearish candle. The top of this tail finishing well below. So that's basically a gap down. We had a gap up. People are going to talk about whether this gap has been filled by this candle. Not quite, but it's not really a problem. These things are not exact to the penny, guys. People want to pretend that charts are this exact science, and they're not. Basically, all charts are telling you is levels where the algos and the market makers are buying and selling the stock, and certain levels where they can't decide whether they're buying and selling the stock. And that's where you're going to get some people doing one of each, and you're going to see the stock kind of consolidate to the side. And if you really kind of look at it and cut off the extremes, we're basically right back where we were in the middle of June, guys, after that run. And we just basically have to sustain the gains we made from that run. Guys, these lines in yellow, these are not sustainable gains. They're always going to check back, particularly a line like this, which we had on earnings, which is just 20% straight up, guys. This is not a stock that's going to, cure cancer overnight. It's not a stock that's going to, like I said, double or triple their revenue. It's not a stock that's going to go, "Oh, we were expecting a loss of 6 cents, but we actually made 30 cents." Guys, it's just not that kind of a stock. It's very predictable. And that's why market makers have had an absolute field day manipulating, because a lot of, retail investors are sort of emotionally invested in the stock. But if you look at this trend line, guys, that started all the way back here on May 15, that had this data, this sort of controlled data for 2 weeks, going up on this nice trend line before we had that massive, very steep run that then checked back twice. On the second check down here, guys, on July 6th, we had three candles that sort of confirm this red trend line. So we have all of these candles. The more data points you have, guys, the more important a support or resistance line or a channel or whatever you're looking at is. If you have 1 or 2 points, guys, it's really not of that much value, because the market makers, the algos, have not settled on that level, have not settled on that line as something that should be respected. But if you look at this line, guys, we have all the way back from May, basically almost through the last 2/3 of May, that trend line. Then we took off, came back, two more on the 6th, 7th, and 8th of July, and then again took off after that point. Up, 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 hit resistance again, came back down pre-earnings, and basically I would look at this as like 1, 2, 3, 4 candles again respecting this trend line. And then we had this incredible pump after earnings. A lot of retail money coming in, a lot of FOMO, a lot of retail traders buying a hell of a lot of short-term call options from market makers who just absolutely cleaned their clock on those. I think a lot of people were actually expecting the stock to run up to like 15 or something based on this earnings report, guys. And this earnings report was not that, guys. It was solid. I mean, it was solid, but it was basically what people want to make a huge deal out of the membership growth. And I love the membership growth. I love the deposit growth, particularly direct deposit growth. I actually like the increase in the loan originations. People are like, "Well, they're not doing student loans and they're not doing mortgage loans." Guys, there's no activity in those markets. I mean, there's been a student loan moratorium. The interest rates have gone up and up and up. So people don't want to refi to a higher rate. People don't want to take a mortgage out right now at like 7% when they've been used to, 2 and 3% rates for like, the last decade or two. So, guys, that's, you have to loan money where there's a demand for it. Like, there has to be a demand for your products. If there's no demand for mortgages right now, you can't fault SoFi because they're not originating a lot of mortgage loans. Like the market conditions will dictate a lot of your business moves, and that's why SoFi management is so good. But if you zoom in on this, guys, you're basically seeing, at least in my estimation, so far we are respecting this trend line. Let me just zoom down to the 1 day and see where we're at. I know we've broken down below it a bit here, guys. But that's okay. There's some consolidation here, some bar coding came down, tested this 975 level again twice, and came back up off it. So as long as we're able to stay above that 975 level, as depicted in this blue line, guys, we are going to be just fine. I don't know what happened to all my charts. I zoom in and zoom out, and then Yahoo is very unresponsive. But in any case, guys, the bottom line is 975 is a critical level, and we need to maintain support again at this line. We've been come down below this trend line a few times, but we came down below it before earnings too, guys. These trend lines are not exact sciences. You have to cut off some of the extremes, and you have to look at the overall trend. And the overall trend, guys, is unmistakable. This trend line has been going up since the beginning, since the middle of May, and nothing has changed, guys. Absolutely nothing has changed. The bulls are still in charge of the stock. The shorts are still screwed because the growth story is still intact. None of the FUD that they used to attack the stock on the last earnings, none of that Chia Pet Army, none of that David Chiavarini special sauce, none of it came to fruition. They were able to sell loans at above the par value, guys. They were able to sell all the loans they want. They make more money holding the loans, but they, if it made sense to shore up the balance sheet, they were able to sell loans absolutely no problem. So what's the other criticism? Oh, there's not going to be as big an opportunity in student loans. Guys, interest rates are eventually going to come down and normalize. Are you in this for a good time or a long time? Like, you say you're a long-term investor, but then you want to freak out and, smoke a bunch of crack because they attack the stock after earnings. Guys, people online are going, oh, you know what happened last time? The stock went before earnings, it was 650 and then it was 450. Hardy har har. I'm like, that's not how I look at it. I look at it like the stock was $6.50 before earnings, and then before this earnings, it was $9.50. So I don't care the route it take. It's like, what did Anton Chigurh say? Is like, if the route you took brought you here, of what use was the journey, or some psychotic serial killer kind of talk. But he's basically like saying, like, if this is where you ended up, of what good was the journey that brought you here, because I'm gonna kill you right now anyway. But guys, that route doesn't matter to me. Like, they attacked the stock down in the fours. I bought a bunch. I knew it was going to come back up because that trend is your friend. um that freaking short attack there right here, it didn't mean anything, guys. This stock was still consolidating. It was already down at 550. Okay, so they took it to 450, they took it to 490, 475. Who cares? They didn't make any money. They didn't they made money here, of course, but they're not really making money on the consolidation. Shorts got absolutely slaughtered, re-shorted there. Shorts have not made any money, guys, on the SoFi stock. I mean, they made some on this short attack, but guys, in all honesty, it's been a good long time since shorts really got rich on the back of SoFi. I mean, this fall was coming down where they made dramatic profits. Like, this has been over now for a year and a half. Like, and the shorts just can't let it go. They just can't let it go because, they hate the SoFi stock. They hate, the big banks, the analyst houses that work for those big banks. They see SoFi taking market share, taking deposits, growing their members, while their growth is either zero or negative. And they're just ruining the day. They will rue the day when SoFi gets into the business market, gets into more and more of these businesses, and starts cleaning their clock even more. You see, Seeking Alpha has basically a bunch of FUD on the SoFi stock, just to take a look at where the media is playing this thing. Is SoFi stock still a buy after 130% rally? SoFi downgraded to underperform by KB. SoFi Technologies price target raised to 1150 from 10 at B of A. That's a very strong upgrade right there. SoFi named to CNBC world's top fintech companies. And so you see, good mix of positive and negative articles here, at least on tip ranks. Going over the analyst forecast, we had a lot of upgrades, a few downgrades. Dan Dolev, who is actually successful more than he's not, 52%. They still have him a half-star analyst. Not really sure why. I find him to be very intelligent, but he came out and reiterated his buy rating, upgrading his price target from $9 to $15. Very, very bullish. Morgan Stanley reiterated again $7 price target. If you look at Jeffrey Adelson, this prepubescent dweeb is, 3 for 12. He's not even really an analyst, guys. He's not an analyst. They sent that Betsy chick, sent him out there to make a fool out of himself because she knew that SoFi was going to continue to grow and do well because she's smart and she has a good rating. So she sent this douche, old Jeffrey Adelson, out there to make his, ninth bad rating out of 12. So the guy has a 25% success rate and he's a huge turd. Mahir Bhatia from Bank of America reiterated and raised the price target from $10 to $11.50. Again, extremely bullish. He's a solid 4-star analyst, successful 57% of the time. Timothy Chode, the Choder, as we call them in college. This guy used to do a lot of crazy things for tips, if you know what I mean. No, I don't really know Timothy Chode, but he's over at Credit Suisse, reiterated. I believe that's an upgrade for them. I think they were at like $6. I'll have to double check. Ashwin Shivakar reiterated the buy at $10. He's with Citibank. It's not really it's more of a hold because $10 kind of where the stock is right now. But anyway, this guy's very, very solid 5-star analyst, 60% success rate. Kevin Barker, Piper Sandler, reiterated again the hold at 8, and he is absolutely solid. Don't really agree with his rating. This guy, Mike Ng from Goldman, just one of the biggest turds in the industry, a complete douche. I don't even know why. Who puts that, what is this, his Match.com profile? What are we on, Christian Mingle? What is that? What is that shot? Jeez. I don't know. I get angry at the stupidest things. But this guy's not even a half-star or quarter-star analyst. He is a firm 0-star analyst. To quote the stock goat, he is successful 34% of the time, so he makes money. You'd be, again, better off throwing darts at a board, flipping a coin, or pulling stock picks directly out of your ass because he is right 1/3 of the time. It's probably difficult, and you guys have to realize their job is not to be right. Their job is to manipulate stock price so market makers can take money from retail investors. So that's my opinion. Lance Jesserun, this guy's new, and I thought he might have been sort of in a cahoots with the forehead, the bologna sandwich, who used to work for BTIG and has since moved over to Compass Point. But, he's new, and I'll say he's new, but so far he's successful 9 out of 10 times, or 90%. 3-star analyst. He was 1 star. So he's proving himself, moving up quickly. That's not really a big enough sample set to say the guy's any great analyst, but it is what it is. He's looking pretty good. Michael Perito, he is still a sell at $7.50. Solid 5-star analyst. If you look at, in my opinion, the 2 best of the bunch, Andrew Jeffrey is the best analyst out of all these guys. He's successful more than 2/3 of the time. And he has almost 500 ratings, and he's right 2/3 of the time. So that's not an accident, guys. That's a lot of data. And he's a buy at $16. John Heck with Jeffries, again, he is right 63% of the time on 500 ratings. That's a huge sample set, guys. He's at $15. Reiterated his buy rating, raised his target at 15. So these 2 top tier 5-star analysts, Truist and Jeffries, Andrew Jeffrey and John Hecht, they raised their target prices to $16 and $15 respectively. You see again, Reginald Smith, he's right half the time. This guy looks like he's about 15 years old. Looks ridiculous to me, but he's a hold. He was at 6. I don't know what he's at. Vincent Kaintic. This guy just looks totally sketchy to me. But in any case, guys, he's a hold at 7. He's with Stevens, and of course the Chia Pet reiterated his sell at $3. He's right 40% of the time. So again, you'd be much better off pulling stocks out of your ass. than listening to this guy. If you listen to his picks, you would lose money 60% of the time. You got Eugene Simuni, right 70% of the time. He only has 10 ratings, but he's a buy at 10. You got the bologna sandwich, the forehead, the beak. Look at this turd. He was with BTIG again for many, many years. He's got 90 ratings under his belt. He's wrong 57% of the time, but he does have a positive return. So when he's right, he is right with some more upside. So, he's at $5 in a sell, the bologna sandwich, the forehead, like you could show a drive-in movie on. Love the guy. DBS, this guy's right 83% of the time. Manyi Lu, he only has 6 ratings, so take that with a big grain of salt, but buy at $10. And then our downgrade, stock's getting ahead of itself. This little smiling, shiny, chubby, otter-looking guy, Dominic Gabriel with Oppenheimer. He's right less than half the time. He's one of the guys who stepped in to kill the last rally with that triple downgrade, those sea bags. Coordinated. These guys they even came out in interviews. They're like, listen, the stock's getting overheated. It's my job to pump the brakes. Like, your job is to give an analysis of the value of the stock. Your job is not to time your comments and time your downgrades to push the stock right at that moment in a certain direction. It's just totally dishonest. Like, come out after earnings, give your logic, give your call, give your advice, and then if something big and material happens, reiterate, change, update. But just to keep hitting the stock over and over and over again with nothing new, with just nothing but FUD to manipulate the price. And they're like, well, we were banging on the table at 5 that it's undervalued. No, you weren't. No, you weren't. Like, you weren't banging on the table. You're a complete lying sack of shit, and you look like a beaver. You look like Jerry Mathers, there, Oppenheimer guy. So, take that for whatever it's worth. Guys, looking at Ortex, which again, I love. None of these companies pay me. I pay for my subscriptions. They go through all the upgrades and downgrades. What, of course, we want to take a look at is a short interest, which is not at all accurate today, guys, because they're saying the borrowed change is 7 million, 10 million returned, 3 million borrowed, net of 7 million, but it's complete bullshit. The cost to borrow max would not be 9%. The profile doesn't fit the profile. Again, to quote America's sweetheart, Sandy Bullock, the estimated short interest of free float is 15, and then the free float on loan is only 11. And the shares on loan have gone from like 240 million down to 88 million. Days to cover have gone down astronomically. Utilization has been a little bit more on the flat side, but cost to borrow has spiked up to like 8 and then some days 14%. This data is very, very tough to wrap your head around. Only thing I can think is that there's a lot of hedging. There's a lot of short long stuff going on because they don't have shares on loan and they're short, which means, they have to have their own shares to cover their short position. So I don't know. Ortex is freaking out on me, service error. But in any case, guys, that's the SoFi stock. Picked back up over $10 here. We've got 15 minutes left in the trading day here on July 2nd, 2023. A lot of upgrades on the stock, but still a lot of downward price pressure. 58 million shares traded on the day. Again, guys, looking at the chart, there's nothing to get super excited about. We're probably, if we can maintain above this support line, we need to get above that 1106 level. If we can stay above 975, consolidate a bit, I believe we will go up through $11.06. Again, my target is $13.75 at the time of a net profit, which I really think now is going to be Q4. I was hoping for Q3. I think it's possible, but I think Noto is just too measured. I think they're paying too much stock-based compensation. And they're just not prioritizing that net profit. They could have done it already. They could have burned the shorts at the stake. And they're just choosing not to do it. So, I trust management. I trust them long term. Is it frustrating that we're so measured and putting so much emphasis on just member growth and not more emphasis on making more profit from the members we currently have? I like the strategy, but again, I do see why short-term people and people that are watching the stock constantly, like myself, can get a bit frustrated. But guys, it is what it is. I think we're still looking really, really good, guys. Remember, it was like 950 coming into this earnings, and we're significantly above that level right now. The stock is holding above $10. So, if you have to remember, guys, just like it was just June 1st ish, like we were, $6. It was just end of May. We were down in the low fives, guys. So it's just 1st of August. It's only been 3 months and the stock has doubled. It's holding on to a lot of the gains it's made. Pump and dump 20% days. They're never going to be sustainable for the SoFi stock. We need to make net profit. We need to make solid gains. We need to take this stock up to 13.75 at net profit. And then as the wheel strategy starts to pay off, free cash flows start to roll in. The price action will take care of itself, guys. So I don't know what you did. I don't know if you sold some shares at the top, flipped them, re-entered back lower, just held, sold everything. Guys, tell me down in the comments, what do you think about the price action? What do you think about the chart? What do you think is going to happen? If you look at this, chart that I drew a certain time ago, all this stuff was, back weeks ago. I was drawing this, or last week, I don't know exactly, but we were going over that all these support lines. We basically put in this target here for earnings. The stock price action came right back up to my target, popped back up, and then we're respecting this trend line, which is basically a very similar to the other trend line I drew on the other chart. But guys, we don't want to see us back in this area, this sort of other side of this wedge. We were in a wedge going this way. We don't want to get stuck in the same wedge coming out because we're just going to trade sideways as depicted in red. We want to trade upwards in this area, guys, in this triangle here. So we'll keep moving up and making higher lows, and that will eventually push us through that $11.06 resistance point. Guys, if you have any thoughts in the SoFi stock, I know it's been one hell of a wild emotional ride, but if you take the emotions out of it, remember we were just at 5, now we're at 10. We were at 950 pre-earnings, now we're at 10. That's a nice little increase, 5%, 6% in the week. That's sustainable. 20% gains are not sustainable for the SoFi stock until we start making net profit or we sign a huge bank to Galileo, something of that nature. Just a lot of member ads and some increase in net interest income and increase in direct deposit. It's just not going to do it. It's just not going to convince the street. It convinces me and it makes me very, very confident in management as a long-term investor, but it's just not worth a 20% rip, and that's never going to be sustainable, guys. They ran the pump and dump after earnings. This time, instead of pumping it before earnings, they did a little dump and pump and dump. The DPD, guys, the dump and pump and dump, a classic, a SoFi classic. Merry Christmas, you turds. But guys, thanks for watching. I really appreciate you. That's the SoFi stock. It's Wednesday, August 2nd, 12:50 p.m. out in Los Angeles. Stock trying to stay above $10 on the day. Volume approaching 60 million shares. Thanks for watching, guys. You guys have a great day, and I'll talk to you again real soon.